The next section we're going to look at is how to account for intangible assets, including amortization. First, we're going to look at intangible assets other than goodwill. We'll look at goodwill separately later because it is a unique kind of intangible asset. But as the first bullet here shows, intangible assets, by definition, have no physical form, so you cannot touch them. You cannot see them. But they do have special rights that are going to help the company to generate revenue over time. Some common examples we have here: patents, copyrights, trademarks, franchises, licenses. These are different types of assets, and they may have different lengths of useful lives, but they're similar in that they are going to give us future benefits. They have some useful life that we're estimating, and they cost us something initially, and that cost we're going to have to use up over time. We're going to have to amortize it over time in the accounting records. So the easiest way to look at this is just through an example. The example here, we see that amortization expense for a $20,000 intangible with a 5-year life would be $4,000 per year. So the straight line method, just like with tangible assets, a truck, for example, if we decided to use the straight line method there, we would take that initial cost, in this case $20,000, divide it by 5 years, and that would give us $4,000 per year. We're going to call it amortization expense instead of depreciation expense. So in the first box, we see the recording of the initial cost. We have debited the patent or the copyright or whatever it is, that asset account. We debit it, and then we credit cash, or we credit a note payable, or whatever we use to pay for it. And then at the bottom, we see the recording of 1 year, in this case, of amortization expense. And it's as simple as debiting amortization expense and then crediting the asset account itself, so the patent or the copyright or whatever. Now, this is something that is a little bit unique compared to how we recorded depreciation expense with tangible assets or the fixed assets. Remember, with the fixed assets, down here at the bottom, we debited depreciation expense, which is similar to this, but what's different is that what we credited with tangible assets was that accumulated depreciation account, the contra asset account. We didn't credit the asset account itself, for example, buildings. Well, with intangible assets, we're generally going to go ahead and credit the asset account itself. So that is one difference. Next, we can take a look at goodwill. And goodwill is a very unique type of intangible asset. As it shows here, it's the excess of the cost of an acquired company over the market value of its net assets being assets minus liabilities. So if we look at the example, company ABC purchased company BCD for $1.2 million in cash. Now, company BCD, the acquired company, had $2 million in assets and $900,000 in liabilities at the time. So if we take a look at the journal entry to record this acquisition, we see that if we just look at the first two lines, the assets of $2 million and the liabilities of $900,000, we can see that there were net assets of $1.1 million. However, we paid more than that for the company. Company ABC, that is, paid more to acquire company BCD. $1.2 million was paid, which was $100,000 more than the net assets of 1.1. So what we do is we go ahead and record the $100,000 of goodwill. Now, one thing about goodwill that makes it totally different than all the other intangible assets we looked at earlier is that it is not amortized, as shown here. We are not allowed to record the using up of goodwill over time. as we did on a straight line basis with the other intangible assets. However, one thing that we're required to do is test goodwill annually for impairment, and if necessary, we have to write down goodwill. As it turns out, if it appears that goodwill has increased beyond what we initially recorded it at when we purchased the company that we acquired, we're not allowed to write it up. However, we do have to write it down if the value of goodwill has gone down below that initial cost that we recorded it at. So, in this example, we're just showing the journal entry that we would make if we decided at the end of the year that, the goodwill we initially recorded, it's actually worth about $10,000 less. And all we would have to do in that case is debit a loss on impairment of goodwill and then credit the goodwill asset account itself.